DSCR loan for commercial property. Are you searching for one? If your answer is yes, then you need to stop what you are doing and listen to me very close. Because if you walk into a traditional bank today asking to finance a 5-unit, a 10-unit, or a mixed-use building, you are walking into a trap. They are going to ask you for your tax returns. They are going to ask you for your W-2s. They are going to put you through committee review. And then, right when you think you are at the finish line, they're going to hit you with what we call moving targets. They change the ratio, they change the down payment, and suddenly that deal that you worked so hard for is dead. I'm Eli, the DSCR Pro, and today I'm going to show you the anti-bank way to buy commercial real estate. In this video, I'm going to break down exactly how DSCR Pro helps investors scale from single-family homes into major commercial assets without the personal income hit. We're going to cover the specific LTVs, the credit scores, and the common sense underwriting guidelines we use in 2026. And if you stay until the end of this video, I'm going to show you exactly how to avoid the yield maintenance trap. This is a nasty little penalty banks use to lock you into bad loans for years. You do not want to miss. Plus, I'm going to share a real story of how a top realtor in New York saved a deal on 130th Avenue simply by knowing who to call when the bank said no. First, let's define what we are talking about. When I say commercial for a DSCR loan, I'm talking about 5 to 20 residential units or mixed-use properties where you have stores on the bottom and apartments on the top. Now, traditional banks treat these like massive corporate deals. They want to see your global cash flow, your personal debt-to-income ratio, and your tax returns for the last 2 years. And the worst part, they usually only offer you balloon payment. That means 5 to 7 years the entire loan comes due.
Oh my God.
And you have to refinance or sell, no matter what the market is doing. That is risky. At DSCR Pro, we do it differently. We strip away the bureaucracy. Number one, we offer a 30-year fixed rate on commercial properties. No balloons, no adjustment. You lock in your cash flow today for the next 3 decades. Number two, we do not care about your personal income. I don't want to see your W-2s. I don't want to see your tax returns. I only care about the property. Does the rental income cover the mortgage? If the answer is yes, we have a deal. We operate on a philosophy of no surprise. We know that investors hate it when a lender goes silent or changes the rules at the last minute. Our process is built to give you certainty, not anxiety. You might be thinking, Eli, this sounds great, but does it actually work for complex deals? Let me tell you about a deal we did recently in Cambridge Heights, New York. This was a savvy realtor, Daniel, who needed to close on a property on 130th Avenue. It wasn't a cookie cutter deal. It required speed and it required a lender who understood the local market nuance. Most lenders would have dragged this out for months with paperwork, but because we focused on the asset, not the borrower's personal tax history, we got it done. Don't just take my word for it. Look at what Daniel said. I worked with Eli to close on 130th Avenue in Cambridge Heights, New York, using the DSCR loan program. It was a delight to work with him. That word, delight, is what we aim for. Real estate investing is stressful enough. Your lender shouldn't be the source of your stress. We should be the solution to it. So what does the box look like in 2026? If you want to qualify for a commercial DSCR loan with DSCR Pro, here is what you need to know. Get your pen ready. We can go up to 80% loan to value in purchases. That is a huge leverage for commercial assets. The ratio, we typically look for a DSCR ratio of 1% or above. That simply means the rent covers the mortgage, taxes, and insurance. The low LTV exception, listen closely here. If you have a lot of equity, let's say you are only borrowing 60 or 65% LTV, we typically do not require the property to cash flow at once. We can do no ratio loans because your equity protects us. Concessions, we allow up to 6% seller's concessions. You can use that to buy down your rate or cover closing costs. Asset, need help with the down payment, gift funds are allowed. Speed, We target a 4-week closing, not 60, 90 days. We move at the speed of business. Now, I promised I will tell you about the yield maintenance trap. In traditional commercial lending, if you try to pay off your loan early, the bank will charge you a massive penalty called yield maintenance or deficit. They basically make you pay all the interest they would have made. It can be tens of thousands of dollars. At DSCR Pro, we use a simple prepayment penalty structure, usually 5 years stepping down. It is transparent, it is clear, and it is no surprise. Stop letting banks treat you like a number. Stop letting moving goal posts kill your deals. If you found this video helpful, give it a like and subscribe for more expert insights on real estate investing. If you're ready to take the next step or have questions, call or text me at 718-300-3503. I am here to help you understand the market, find smart loan options, and turn today's challenges into tomorrow's cash flow. Watch Real Estate LLC holding company structure next so you don't use the wrong entity setup, trigger preventable lender conditions, or pay for expensive fixes right before closing.